Hey everyone, welcome back to Corporate Decoder, where we take a look at the fine print so you don't have to. Today we're diving into a company that is looking to raise quite a bit of cash, and they do it in a way that is pretty common for publicly traded companies. Stick around to see how they plan to do it and what it means for their stock. And before we jump in, if you like cutting through the jargon to get to the real story behind company filings, make sure you are subscribed. Also, we have a growing community over on Discord where we discuss these filings, and much more link is in the description below. Alright, so what we have here is a Form 8K filing. Think of this as a company telling the public about a really big, important event that just happened. It is not a regular update like a quarterly report, but rather a something major just changed kind of announcement. This particular filing is dated the 27th of February 2026, and it is from American Healthcare REIT Incorporated. Now, the name REIT tells you a lot. It stands for Real Estate Investment Trust. These companies typically own, operate, or finance income producing real estate. So, we're talking about a company that probably owns a lot of buildings, likely related to healthcare, given the name. The meat of this report is all about a new agreement. It is called an ATM Equity Offering Sales Agreement. Let's break that down. ATM stands for At the Market. This means the company is planning to sell its stock directly into the open market, whenever it seems like a good time to do so. Equity offering means they're selling shares of their stock. And sales agreement is basically the contract that lays out the terms for how this will happen. The company American Healthcare REIT Incorporated entered into this new agreement with a bunch of different financial players. You've got BofA Securities, Barclays Capital, Citigroup, and several others. These are the agents, as the report calls them. And these agents will be helping the company sell its stock. Now, the really interesting part is the sheer amount of money they're looking to raise. This agreement allows for the sale of shares with an aggregate gross sales price of up to $1.75 billion. That is a massive amount of money. What is also notable is that when they signed this new agreement, they basically cancelled an old one they had. They had a similar agreement in place since August 2025. It seems like they're upgrading their cash raising strategy or finding better terms with the new deal, which is common in finance. They mentioned that with the old agreement, they still had about $230 million worth of stock left to sell. So this new deal basically replaces the old one and expands the potential to sell even more stock. This means the company gets to decide when and how much stock to sell. They'll be looking at things like market conditions, how their stock is trading, and how much money they need. This allows them to be flexible and try to get the best price for their shares. They can sell these shares in a few different ways. They can do negotiated transactions, which might mean selling a large chunk of shares to a single buyer, or block trades. But the main idea is these at-the-market offerings. This means they'll be selling shares through regular brokerage transactions, basically at the current going price on the stock market, like the New York Stock Exchange. This is a very common way for companies to raise capital without causing too much of a scare in the stock price, because it happens gradually. One interesting point here is that the agents, the investment banks, aren't obligated to sell a specific amount of stock. They just have to try their best to sell what the company asks them to sell. This is standard practice for these types of agreements. So how do these agents get paid? They'll earn a commission. This commission will be a percentage of the money they raise from selling the stock, and it won't be more than 2.0%. That is a pretty good deal for the company, as bank fees for raising this much money can be quite high. The agreement also mentions that the company might sell shares directly to these agents as principal. This means the agents would buy the shares from the company and then resell them to their clients. This is another way to get cash quickly, but the price would be negotiated at that specific time. This part gets a little technical, but it is important. It talks about forward sale agreements and forward sellers. Essentially, it means the company might enter into agreements where they agree to sell shares at a future date at a predetermined price. These agents, acting as forward sellers, might borrow shares from somewhere else and sell them in the market now to hedge their risk. The company then has to deliver those shares later. This is a way to lock in prices and manage risk for both sides, though it can get complicated with price adjustments and dividends. So what will American Healthcare REIT Incorporated do with all this money they're raising, potentially up to $1.75 billion? The report says they intend to contribute the net proceeds to their operating partnership. This is a common structure for REITs. They'll get partnership units in exchange, which can later be exchanged for cash or more shares of the company's stock. The operating partnership will then use the money for general business purposes. This could mean paying down debt, which is always a good sign if they have a lot of it. It could also be for everyday operations, investing in new projects, or making future acquisitions. This part is key to understanding where the company is headed. It is also important to note that any shares sold under this agreement will be done through a prospectus supplement. This is another legal document that provides more details about the offering. Essentially, they're already registered to sell a certain amount of stock under a shelf registration statement. This means they've gotten pre-approval to issue and sell stock over time. And this new agreement is just activating that process for a significant amount. And of course, they include a legal disclaimer. This report itself is not an offer to sell stock, and they'll only sell it where it is legal to do so. Standard stuff for these filings. Finally, the filing lists the exhibits. The most important one here is Exhibit 1.1, which is the actual ATM equity offering sales agreement itself. If you are really interested in the nitty-gritty, that is the document to read, though it will be filled with legal jargon. Now, to wrap things up, American Healthcare REIT Incorporated is looking to raise a huge amount of money, up to $1.75 billion, by selling its stock on the market over time. This is a common and flexible way for companies to get the capital they need for growth, debt repayment, or other corporate needs. The fact that they are doing this through an at-the-market offering suggests they are confident in their stock price and their ability to sell shares without too much disruption. The key things to watch are how much stock they actually sell and what they use the proceeds for. If they're using it to pay down high interest debt or make strategic acquisitions that are likely to boost earnings, that is a positive sign. If they're just raising cash without a clear plan, it could be a sign of underlying financial pressure. Given they are a REIT, their business is very dependent on real estate markets and interest rates. With interest rates having been on the rise, it is important for them to manage their debt effectively and ensure their properties continue to generate strong returns. The significant amount of capital they are seeking indicates they have ambitious plans or perhaps a need to refinance existing obligations. The success of this offering will likely depend on overall market sentiment towards REITs and the healthcare real estate sector, specifically. Alright. That is our breakdown of this Form 8K filing. What is your take on this massive fundraising effort? Do you think it is a sign of strength or a potential red flag? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button and subscribe for more corporate deep dives. And don't forget to check out our Discord community in the description to continue the conversation. Thanks for watching, and we'll see you in the next video.